Something important has just changed, and if you receive money through the DWP, this could affect your next payment sooner than you think. Right now, across the UK, thousands of people are checking their bank accounts, letters, and online journals, trying to work out what these newly announced banking rules actually mean for them. Some changes are already live, others are coming into force before 30th December, and missing the details could lead to delays, checks, or even interrupted payments. This isn't background noise, it's happening in real time. Whether you're paid universal credit, pension credit, PIP, ESA, carer's allowance, or any other DWP support, the way your bank handles those payments is becoming just as important as the benefit itself. Small things that were previously ignored, how your account is set up, name matches, account status, and reporting changes, are now under much tighter rules. And here's the part most people don't realize. These rules don't always come with a clear warning. For many claimants, the first sign something has changed is a payment that's late, flagged, or temporarily held. By the time you notice, the deadline may already be close. That's why this matters now. The DWP has confirmed 7 new banking-related rules, and while they're designed to improve security and accuracy, they also place more responsibility on you to make sure everything is correct before the cutoff. Waiting until January could be too late for some people. In this video, we're breaking down exactly what you need to know, what to check today, and what action you may need to take before 30th December to protect your payments. No panic, no rumours, just clear, UK-specific information explained in plain English. If you rely on DWP money to cover rent, food, heating, or day-to-day living, this is not something to skip or assume doesn't apply to you. Even one overlooked detail could cause unnecessary stress at the worst possible time of year. So stay with me. In the next few minutes, I'll walk you through what's changed, why it matters, and how to make sure your DWP payments continue without disruption. All right, let's carry on from there and slow things down for a moment, because once the headline fades away, what really matters is how all of this plays out in real life. When people hear phrases like new banking rules and DWP payments, it can instantly feel overwhelming, especially when money is already tight and the end of the year is approaching. So instead of rushing through jargon or dramatic claims, this is about calmly understanding what's changing, why it's happening, and what it realistically means for you if you live in the UK and receive money from the DWP. First, it's important to understand that the DWP itself doesn't operate in isolation. It works closely with banks, building societies, and payment systems across the UK. When changes are announced, they often come from a combination of updated government policy, fraud prevention measures, and new banking standards that apply across the financial system. That's why these updates don't always arrive as a single letter saying, "Here are the 7 rules." Instead, they show up as changes in how payments are checked, processed, and approved. For many people, nothing dramatic happens at all, but for others, especially where details are slightly out of date, these changes can suddenly feel very real. One of the biggest reasons these updates are happening now is because the DWP is under increasing pressure to make sure public money is paid accurately and securely. Over the past few years, there has been a strong push to reduce incorrect payments, prevent fraud, and ensure that money is only going to the person who is entitled to receive it. From the government's point of view, tightening banking checks is seen as a way to do that without changing benefit rates or eligibility rules. From a claimant's point of view, though, it can feel like yet another layer of scrutiny added to an already complicated system. What many people don't realise is that banking rules don't just apply when you first make a claim, they apply continuously. That means your bank account details are not a set it and forget it part of your claim. If something changes, even something that feels minor, it can trigger questions behind the scenes. A slight mismatch in your name, a change in account status, or even switching banks can all become relevant under tighter checking systems. These are the kinds of issues that new rules tend to focus on because they're the easiest places for errors to occur. As we get closer to the end of December, timing becomes especially important. Payments around Christmas and New Year are already affected by bank holidays, earlier payment dates, and processing schedules. When you add new banking checks into the mix, the margin for error gets smaller. That's why the "act before 30 December" message keeps coming up. It's not about creating panic, but about recognizing that if something does need correcting, it's far easier to do it before offices close, staff numbers drop, and payment runs are locked in for the holiday period. For people receiving universal credit, this can feel particularly relevant. Universal credit is heavily digital, and many changes are flagged automatically through data matching. Banks can confirm whether an account is active, whether the name matches, and whether the account is suitable for receiving government payments. If something doesn't line up, it doesn't automatically mean your payment stops forever, but it can mean a pause while checks are carried out. And when you rely on that money for rent or bills, even a short delay can cause stress. Pensioners are also affected by these kinds of updates, even if they've been receiving the same payments for years. Pension credit and state pension payments rely on the same banking infrastructure, and older accounts are sometimes more likely to have outdated details. For example, accounts that were originally set up decades ago may not fully align with modern verification systems. Again, this doesn't mean payments will suddenly vanish, but it does mean that checking details now is far easier than dealing with a problem later. Another group that often gets caught out is people who use joint accounts or accounts that aren't in their exact name. In the past, this was sometimes accepted without much issue, especially in family households. But as rules tighten, there is more emphasis on the account holder matching the claimant. If your benefit is paid into an account that belongs primarily to someone else, or where your name is abbreviated or missing, that's the sort of thing that could be flagged under updated banking standards. It's not about accusing anyone of wrongdoing, it's about systems being stricter than they used to be. There's also a lot of confusion around what banks actually share with the DWP. It's important to be clear here because rumors spread quickly online. These updates are not about banks monitoring your day-to-day spending or reporting every transaction you make. They are focused on payment verification, account validity, and identity matching. In other words, they're about making sure the right money goes to the right place, not about tracking how you live your life. Understanding that difference can ease a lot of unnecessary worry. That said, the responsibility still falls on claimants to make sure their information is accurate. The DWP assumes that if you are receiving payments, your details are correct unless told otherwise. New banking rules don't usually come with personalized warnings ahead of time. If a system flags an issue, that's when contact is made, and by then, a payment cycle may already be affected. That's why checking things proactively is so strongly advised whenever changes like this are announced. It's also worth talking about how communication works, because this is another area where people get caught out. Official messages from the DWP usually come through your online account, by post, or occasionally by text. They will never ask for sensitive information through unsolicited phone calls or random emails. As new rules come into force, scammers often try to take advantage of the confusion. So while it's important to act before deadlines, it's just as important to make sure you're responding to genuine requests and not panic-driven messages that aren't legitimate. For people who have recently changed banks, this is an especially important moment to double-check everything. Switching accounts is common now, particularly with switching incentives offered by banks. But even when you've told the DWP about a new account, delays or errors can happen if the information wasn't processed correctly or if there was a typo. Under tighter banking rules, those small mistakes are more likely to be picked up. Taking a few minutes to log into your account or check recent correspondence can save a lot of hassle. There's also the question of accounts that are overdrawn, restricted, or flagged by banks for unrelated reasons. Sometimes an account can technically exist, but not be suitable for receiving certain types of payments. If your bank has placed limitations on your account, even temporarily, it can affect incoming funds. These situations are becoming more visible under updated systems, which is another reason why people are being encouraged to check with their bank as well as the DWP if they're unsure. As we talk about these changes, it's important to keep the tone realistic. Not everyone will be affected. In fact, many people will see absolutely no difference at all. But the reason this topic matters is because for those who are affected, the consequences feel immediate. A delayed payment isn't an abstract problem when you're budgeting week to week. That's why awareness is key. You don't need to panic, but you do need to be informed. One of the most helpful things you can do is simply review your details as if you were seeing them for the first time. Is your name spelled exactly the same way on your bank account as it is on your benefit claim? Is the account active and used regularly? Is it solely in your name, or if it's joint, is that clearly recorded? These are simple questions, but they align closely with the kinds of checks that new banking rules tend to emphasize. If something does need updating, doing it before the end of December makes a real difference. Not because the system shuts down entirely after that date, but because the holiday period slows everything down. Staff availability, processing times, and payment schedules are all affected. What might take a few days in early December could take much longer in January. Acting early gives you breathing room. It's also worth acknowledging the emotional side of this. For many people, dealing with the DWP is already stressful. Any mention of new rules can feel like a threat, even when it isn't intended that way. That's why clear, calm information matters. These changes are not about suddenly removing support from people who need it. They are about aligning payment systems with modern banking standards. Keeping that perspective can help reduce anxiety. As we move forward, it's likely that banking checks will continue to evolve. This isn't a one-off event. Digital systems, data matching, and automated verification are becoming more common across all areas of public services. Understanding how these systems work, even at a basic level, puts you in a stronger position. It means fewer surprises and more control over your own situation. So as this year comes to a close, think of this less as a warning and more as an opportunity. an opportunity to make sure everything is in order, to avoid unnecessary delays, and to head into the new year with one less thing to worry about. If your details are correct, you can move on knowing you've done what you need to do. And if something does need fixing, finding out now is far better than finding out when a payment doesn't arrive. In the next part of this discussion, we'll look more closely at what practical steps you can take today, how to spot genuine messages from the DWP, and what to do if you think a payment has been affected. The aim is simple: clarity, confidence, and continuity. Because when it comes to DWP payments, staying informed is one of the most powerful tools you have.